Welcome back. It is day 2 of the Goldman Sachs Industrials and Materials Conference. And Yahoo Finance's Seana Smith is speaking with leaders on what the current economic climate means for their businesses. She joins us now with Clean Harbors CEO Michael Battles. Seana, take us away.
Thanks so much, Diane. Mike, thank you so much for being with us here this afternoon. So we're wrapping up day 2 of Goldman Sachs' conference. And my takeaway so far is that the sentiment and the theme is very, very bullish. What's your assessment of the industrial economy right now?
Well, Seana, thanks for having me. And I think that it's certainly our pipeline still remains very strong. We see a lot of waste in our network. And I think that, our order book still is still booked out kind of all summer long. So I really don't see any slowdowns in the industrial economy just yet.
And when you talk about what is driving your business, your stock has been doing very well since the start of the year, up nearly 40% over the past year. You just released earnings beating on both the top and bottom lines. One of the standout sectors was your environmental services segment. What's driving that growth, and how much does pricing have to do with it?
Pricing is a big part of it. Also, we're getting a better mix of more high hazardous waste streams into our network, which is driving a better price point. But, price is important. Our costs have gone up. We've been forced to raise price. And also, as we raise price, we have to look at our cost structure and maintain a lean and mean cost structure to drive profitability.
Are you seeing some of those inflationary pressures easing at all?
A little bit on some of our, maybe on drums and on solvents, but certainly our wages, they're not going backwards. Our cost of materials aren't going backwards. And so we're still feeling that pressure. I haven't really seen a lot of that yet.
And when we talk about your Safety Clean division there, I know there has been some sector-related challenges within that division. What does that outlook look like for the remainder of the year?
We feel good that, where we landed today is going to be we'll be able to deliver on that number. I think that it's, when oil prices do go down, it does hurt us in the short term, but overall, we're really bullish on that business over the long term.
And when we talk about some of the macro pressures here, of course, the slowing economy, the risk of recession, and then we have the debt ceiling debate that's going on down in Washington right now. How are you looking at that just from a CEO perspective and the potential impact a business like yours could have from that?
I think the important part, Seana, is to maintain a strong balance sheet. Mm-hmm. And I think that if there is kind of recessionary pressure down the road, debt ceiling, different crises, some companies may not come out of that looking so good. And I think that we'll maintain a strong balance sheet to be opportunistic to do acquisitions or things like that if they come to pass.
We were just talking to Joe Ritchie of Goldman Sachs, and he was talking about how when we speak about this bullish environment right now for your sector, the unprecedented investments that we are seeing, the reshoring efforts, regulatory environment right now, how do you see that playing into Clean Harbors' playbook here going forward?
So I'm not sure if I call it reshoring. I'd say it's shoring, because what's happening is that, and I can't explain like kind of every single customer's examples, but certainly as you think about our larger customers, their demand is picking up. And is it because the macro factors are there, or because they're not doing as much internationally and more doing production in North America? Because we're certainly seeing that type of volume into our network.
Are you able to keep up with the demand that your business is seeing?
In certain areas we are backed up a little bit because we are seeing an unprecedented amount of demand. In certain areas we've been doing a great job of hiring and training our people. We're up over 1,300 direct labor headcount, and that's really been able to service our customers well.
Speaking of that hiring count here, it was very impressive. I was reading through your latest earnings release there. In terms of your hiring efforts, are you having trouble finding some of those workers given the fact that you have such a need to fill that headcount?
The answer is we've had trouble. Our turnover, it's not just hiring people, it's retaining the people we have. And we are lowering our turnover rate down to pre-COVID levels, which has been terrific. So in my mind, I think it's as important to keep our own employees and provide a good career path for them as all it is to hire more capable bodies.
What are you doing in order to improve that retention rate?
It's everything, Seana. It is improving, more holidays, better healthcare costs, providing a career path for our employees, because we are 20,000 strong, and you can move up in the company. My co-CEO started as a driver. And so he moved his way all the way up to this chair.
He started as a driver at Clean Harbors.
He did. And so it just shows you that we do believe we give people chances, and it does provide a great career path for our employees.
Another big theme coming from this conference is technology investment, the role that AI is going to play in your industry specifically going forward. What does your technological investment look like, and are you guys incorporating AI at all?
So we consistently make efforts into our technology. We have one ERP system that runs the entire company, and we continue to make continuous investments, whether that's RPA, whether that's AI, to do things smarter. Is certainly part of the story, but we've been making investments kind of all along into technology, and that continues.
Mike Battles, we really appreciate you taking the time to join us here. Your first time on Yahoo Finance, co-CEO of Clean Harbors. Thanks so much.
Thanks for having me.